Hello and welcome back to the Microlearning Institute. In this short tutorial we look at a question called Locken Company. Locken's reporting currency is in dollars, but in this period Locken has had a number of foreign currency engagements. One is they've acquired a property in Auckland in New Zealand at a cost of 600,000 New Zealand dollars. And secondly, we're told in the question that Locken has partly financed this investment by a loan of 250,000 euros. And the question asks us, how would the net gain or loss on exchange on these items be recognized in the financial statements of Locken for the year ended the 31st of December 20x0? So firstly, let's look at the loan. So we're told that the loan is in euros, and of course we need to translate any movement on the carrying amount of the loan to dollars for reporting purposes. So the loan was taken out on the 1st of the 1st x0 for 250,000 euros, at which time we're told that the exchange rate from US dollars to euros was 1:1. So consequently the loan was initially recognized at $250,000. At year end, the loan had the same carrying amount in euros of 250,000 euros, but the exchange rate had moved now to 1.1 US dollars to the euro, so consequently the carrying amount of the loan liability in dollars at the 31st of the 12th x0 was down to $227,270. Therefore, Locken made an exchange gain on the carrying amount of the loan, and this exchange gain was $22,720. Next, let's look at the carrying amount of the investment. The investment, of course, is carried in New Zealand dollars, so as previously we need to translate the carrying amount of the investment in New Zealand dollars to US dollars. Initially, the investment was valued at 600,000 New Zealand dollars, and at the 1st of the 1st x0 the exchange rate was 2.2 US dollars to 1 New Zealand dollar. So this translated to 272,700 US dollars. By year end, the carrying amount of the investment was still the same as valued by a number of independent professional valuers. However, the exchange rate had moved now to 2.25 US dollars to 1 New Zealand dollar. So the carrying amount of the investment had now reduced to $266,600. Consequently, we made an exchange loss of $6.1 thousand to the P&L. So in summary, on the loan we made an exchange gain on the translation of the loan of 22,720, whereas we made an exchange loss on the translation of the investment of $6,120. So the net gain to the P&L is $16,600 US. Thank you very much for watching this short tutorial from the Microlearning Institute.